So, Rupert, your biggest concern in terms of policy is that the ECB rushes into something that I guess there's not enough overlying strength. What about the Fed? Is a policy mistake from a Fed possible?
Look, it's possible. I think that with this Fed, it's very unlikely. You know, Janet Yellen is very unlikely in the end to force through a series of rate hikes if the evidence on inflation doesn't come through. She's still fundamentally dovish. But they have changed to, you know, we've seen a regime change away from this very kind of month-by-month data-dependent approach that we saw for much of last year. And now we are into more of a kind of forecast-based monetary policy, a bit more familiar, actually, for kind of, you know, long-term monetary policy watchers that they're navigating by their model, essentially. They think inflation will come, the Phillips curve is still alive, we've got to start raising rates slowly. But, you know, look, the decision point...
The Phillips curve seems dead.
Well, it seems dead. I think that, you know, we've looked at a lot of this in a lot of detail, and if you go back to previous cycles, you need to account for the fact that this cycle is very, very slow, very, very long, but it's normally only at this point that you start to get that inflation pressure coming through from wages. It always comes later than you think, and this time people have got so, you know, tired waiting, they're starting to think, okay, maybe this time is different. But I don't think those kind of fundamental laws of economics have changed, and you still do see this kind of upwards drift in many of the wage indices, and that should end up in core inflation eventually. So I still think that model is intact.
Yeah.
We don't yet have the evidence to say it's not.
Rupert, to take it back to the United Kingdom and Governor Carney, are we back to Clement Attlee's United Kingdom? Are we back to, like, lousy wage growth that overcomes all monetary orthodoxy?
I think that the UK has this specific circumstance where a Brexit uncertainty, I think, is going to make it very difficult for wage demands to start accelerating, even though actually look at the labour market data, it's pretty strong.
Agreed, but the wages aren't there, are they?
Yeah, and I think that the uncertainty can do that. I think that, you know, you look at the UK macro generally, I think expectations are very pessimistic. Actually, if you look at investment intentions, they've come right back. The labour market's continuing to grow. But it's very hard to see firms that are facing uncertainty over the next few years, I think, agreeing to big increases in wages. And I would be very surprised by that. I think the core of the Bank of England would be very surprised by that. So I still think that they are unlikely to surprise us in either direction, actually. I mean, I think that, you know, there's not much scope for loosening. There's certainly no sign of the need for that. And equally, I'd be very surprised by a rate hike anytime soon.